Aloha, Lahaina here, and welcome to the Maui Real Estate Advisor April edition. Thanks for joining us. As always, we're going to walk through what's actually happening on the ground here on Maui, the real estate market, what's going on in Lahaina, how tourism is tracking, and the ongoing saga that is Bill 9. And I'll tell you up front, this month, there's a lot to talk about. The condo market and the home market are telling very different stories right now. And both of those stories matter depending on where you are and you're thinking about Maui real estate. So let's get into it. As always, context first. Lahaina, tourism, Bill 9, and then we'll get into the numbers. I'll wrap up with our take on what all this means if you're considering a move in this market. I want to start in Lahaina because Lahaina is still the story, even when it can feel like it's starting to fade from the headlines. And honestly, that concerns me a lot. We're now well over 2 years out from the fires, and from a distance, it can look like things are moving. And there are homes going up. Some families have come back. Every month, there's a county meeting and we hear about the progress being made. But for those of us who actually live here, people who lived in Lahaina, West Siders who love the town, the pace feels frustratingly slow, especially on the commercial side, especially on Front Street. I keep thinking about what's happening in California right now. People in Pacific Palisades and Altadena are understandably frustrated about how long rebuilding is taking. And California's governor stepped in and said, cut the red tape, let people rebuild, let's go. And I have to ask, where is that energy here? Where are our leaders? Because right now, our property owners, some of them local families, people whose entire livelihood depend on commercial tenant rent, are still stuck. Many are not even in the permitting process yet. During the community meetings about rebuilding the commercial corridor in Lahaina, there were no concepts, no presentations of anything being built on the ocean side of Front Street, the way it used to be. When I asked if there is even any potential of property owners being able to rebuild their properties on the ocean side, the county and those other entities came back and said, condescendingly I might add, there is a path. But no one in government is encouraging anyone to take that path, and that path is fraught with obstacles. Property owners are being held hostage. Here's where things actually stand as of April 6th. We lost 2,200 properties in the Lahaina burn zone. Since the fire, 568 permits have been issued. Of those, 181 structures have been completed. 352 permits are currently being processed. So we've got well over 1,200 properties somewhere in the pipeline. That means there are still more than 1,200 properties who haven't started, can't start, or, and this is the part that keeps me up at night, may have already given up. For those of you thinking about Maui real estate from the mainland, I want you to hear this not just as a human story, which it absolutely is, but also as a market story. The pace of Lahaina's commercial recovery has a direct impact on property values, on short-term rental demand, and on the character of the island you'd be buying into. A rebuilt Front Street changes everything. The longer it stalls, the longer that upside stays off the table. All right, let's shift to tourism because this connects directly to the real estate, especially if you're thinking about condo or anything short-term rental related. And here's the thing, the headline numbers are actually pretty encouraging. Maui saw about 2.5 million visitors in 2025. That's up roughly 7% from 2024. Visitor spending came in at just under $6 billion, up more than 12%. Hotel occupancy climbed to around 71% in early 2026. So on the surface, things are moving in the right direction. But, and you knew there was a but coming, we always benchmark back to 2019. That's our last normal year. And against that standard, we're still running about 23 to 25% below pre-pandemic visitor volume. So yes, we're improving, we're just not all the way back yet. Now, compared to the rest of the state, Maui is actually outpacing other islands in terms of growth. But some of that is because we're recovering from a lower base. So let's not get too excited about the growth rate without keeping the context in mind. Now, here's the trend that I actually think matters most. And this is the one I'd like you to hold on to if you're thinking about vacation rental income potential. We have fewer visitors than in 2019, but higher spending per visitor. The traveler coming to Maui right now skews wealthier. They're spending more per day, they're staying a similar amount of time, and we have a higher end visitor profile than we've ever had. And for vacation rental owners, that matters because the guest profile tends to support higher nightly rates. Fewer bookings doesn't necessarily mean less revenue. It can mean better revenue and a better guest experience to boot. Now, that said, I want to be honest about what the numbers look like from an ownership standpoint. Condo occupancy is still lagging, sitting around 60 to 70% compared to 75 to 80% in 2019. Insurance costs are up significantly. AO fees are rising. Net income is compressed. It's not a slam dunk the way it might have looked 5 years ago, which is why doing the math carefully with current numbers really matters right now. Okay, so now we've got lower than 2019 occupancy, higher costs with more variable rental income, and I want to add one more layer to that picture because this is where it all starts to connect. Bill 9. If you've been listening to this podcast for any amount of time, you know what Bill 9 is, but let me give you the quick version for anyone new to the conversation. Bill 9 is legislation that phases out short-term rental use in all apartment zone condo complexes on Maui. Easy for me to say. Not some of them, all of them. The intent is clear. What's a little fuzzy is the timeline and the implementation. There has been some movement around proposed hotel zoning categories H3 and H4, which could potentially allow certain properties to continue operating as short-term rentals. But the Planning Commission did not recommend approval. The County Council is still working through it, and more legal challenges are expected. As of right now, today, there is no final outcome. There is only uncertainty, and uncertainty has a cost. Here's what I'm seeing in the market as a result of that uncertainty. Buyers are more cautious. Income projections are more conservative than they were 2 years ago. Some buyers are sitting on the sidelines entirely, waiting to see how this resolves before they commit. On the seller side, it's mixed. Some sellers have adjusted their pricing to reflect the reality of the market. Others are still holding out, hoping the H3, H4 pathway opens up or that litigation changes the picture. The gap between where sellers are and where the buyers are, that's a big part of why condo transaction volume is depressed. Here's how I think about Bill 9. It's not just what ultimately happens. It's about when and how clearly it happens. Right now, neither of these questions has a clear answer. That said, and I mean this, uncertainty cuts both ways. For buyers who take the time to understand the landscape, who get the right legal guidance, and who focus on the right zoning category and the right property, there may be real opportunity in exactly the kind of market that has everyone else hesitating. All right, let's do the numbers. As always, I'll start with condos because this is where the Bill 9 context we just talked about really shows up in the data. The condo market has been in a slump for about 2 years now. April of 2024 was the last time we saw more than 100 closings in a single month. Since then, it's been a grind. January of this year hit the floor, just 44 sales. But in the 2 months since, we've shown some genuine recovery. 64 closings in February, 74 in March. We'll take that. But here's the number that really tells the story. We currently have 911 condos on the market. That's over 12 months of inventory. 12 months. To give you a sense of what that means, anything above 6 months is considered a buyer's market. We are deep in buyer's market territory right now. On price, the median selling price came in March at about $675,000, right around the 12-month median. Prices are holding relatively steady at this level. The average selling price is up at about 1.185, above $1 million for 3 of the last 4 months, so relative stability there. One thing I'm watching, pending sales, our leading indicator for future closings, slipped from 118 in February down to 107 in March. I don't love seeing that directionally, but 107 is still the second highest total we've had in the last 12 months. So I'm reading it as a mild caution, not a red flag. Bottom line on condos, it's a buyer's market with a capital B. If you're looking at vacation rental opportunities, the selection has never been better. You have time and leverage. Use them. Now let's talk about single-family homes, and I want to lead with the headline because it deserves that treatment. 76 homes closed in March. That's the highest single month total we've had in over 2 years. The 24-month average is around 60 closings a month. February was just 46, which I called paltry at the time, and I stand by that. March was a significant rebound. And here's where it gets really interesting. Inventory has declined for 3 consecutive months. It now sits at 436 homes. That gives us 5.7 months of supply. 5.7. For context, 6 months is a threshold for a balanced market. So we're right at that line for the first time in a very, very long time. After more than 2 years of buyer-favorable conditions, the ground is starting to shift. If you've been watching from the sidelines, waiting for a signal that the window might be narrowing, I'd pay attention to this one. On price, the median selling price for homes came in at just over $1.2 million in March. That's down from the 2025 average of around $1.3 million. And I actually think that price adjustment is part of what's driving the sales acceleration. When prices come down to a level where more buyers can transact, the market finds its footing. The math works itself out. The average selling price came in at just under $1.5 million, though I'd note that number may be skewed by a thin upper end. There's only one sale that came in over $4 million in March. Slim activity in the top tends to pull the average down. Here's one more data point worth flagging. The average asking price for homes has climbed from around $3.3 million last August to around $3.7 million today, even as the median selling prices have been falling. That's a widening gap between what sellers are asking and what the market is actually delivering. For well-capitalized buyers, that can represent a real opportunity at the negotiating table. Bottom line on homes, March was the strongest month in years. Inventory is tightening and this market is approaching balance. If you've been waiting, this is the kind of signal worth taking seriously. All right, let me bring it all together before I let you go. You've heard the phrase Maui time? Let me put that in context. Maui is a place that earns your patience, and April 2026 is a pretty good example of what that actually means. The Lahaina rebuild is moving too slowly, and that frustration is real and legitimate. But homes are going up. Families are coming back. Some version of Front Street will be rebuilt. The question is when, and that timing has real implications for Maui property values. Tourism is on the right trajectory. The visitor we're seeing today, fewer in number but higher in spending, is actually a very good fit for the kind of island experience Maui has always been best at delivering. For rental owners, that's a meaningful tailwind even as the overall recovery continues. Bill 9 is the wild card. No timeline, no final resolution, more litigation on the horizon. That uncertainty is a drag on the condo market, and it's going to stay that way until there's clarity. But uncertainty isn't the same as impossibility. The buyers who are doing their homework, working with the right advisors, and asking the right questions about zoning and risk, those are the buyers who tend to come out well on the other side. On the market itself, condos are deeply in buyer's market territory. More inventory, more leverage than we've seen in years. Homes are a different story. Inventory is tightening, sales are accelerating, and the window for buyer favorable conditions may be closing faster than most people expect. For condos, it's a buyer's market with a capital B. For homes, the ground is shifting. Either way, the most expensive thing you can do right now is wait without information. If you've been watching this from the mainland and wondering whether it's the time to have a real conversation about Maui real estate, I'd love to talk story. No pressure, no agenda, just a conversation. You can reach out through the website or shoot me an email, lee@alohapots.com. I answer every one. And if you got something out of this episode, give us a like. Maybe share it with someone you know who's been thinking about Maui. If you haven't already, hit subscribe so that you don't miss anything. And if someone you know is thinking about buying, selling, or just keeping track of what's happening in this market, we've got a fabulous team of seasoned, well-trained agents standing by to help you out. That's all for now. So, from the greatest island on earth, this is Lahaina Lee saying, aloha. Tony Brown produced this podcast. The information provided in this podcast is for educational and informational purposes only. It's not intended as a recommendation to invest in real estate or any other financial asset. We are not financial planners, certified public accountants, or attorneys. You should consult with a qualified professional before making any financial, legal, or investment decisions. All investments carry risk, and past performance is not indicative of future results.